So a lot of friends and clients have been asking me, what the hell is infinite banking? Infinite banking is actually more of a concept. It's a strategy. Um, I guess the one who gave prominence to it is this guy named Nelson, and it's a procedure, really. Um, it's not a product. It's nothing of what you may think it might be. Here's what it is. If you find yourself in a position where you need to purchase whole life insurance, and I want to say this from the get, I think the majority of people would do far better by just getting term. However, if you find yourself in the rare few who might actually benefit from having this kind of insurance for your family, then this is something you could do with the contract, because that's what insurance is. It's a contract that an insurance company is saying, we believe, based off of these factors, we're going to be able to collect premiums for you on your life, and we'll be able to invest it. And it's a beneficial contract for the insurance company because they'll be able to make money on top of your money, while at the same time ensuring a benefit for you, in this case with whole life insurance, a death benefit at your death. What's unique about whole life insurance is that there's typically two kinds of pockets for the money, where one goes to the insurance and the other one is a cash value. That cash value, you could potentially, and this is the part of the infinite banking strategy, take a loan on it, where typically, depending on whoever the insurance company is going to give it to you at 5% interest. At that 5%, usually the idea is you'll be able to take that money and invest it somewhere else, yielding a better percentage than 5%, or you use it for your own benefit. Why that's not for everybody? Most people are not in a position to afford whole life insurance, especially if they're purchasing it when they're a little bit older. Okay. The right kind of person would be, one way could be if you're a business owner and you're trying to make sure that your business partner has a way to purchase your position in the business, where you could use a partnership agreement to do that. And if you structure it properly with the kinds of businesses out there, because there's so many different kinds of ways to do this, if you do this with the right structure, part of those contributions could be tax deductible. That makes sense. It's expensive, but it makes sense. Another instance could be if you might have an estate issue and you're trying to cover for one or multiple entities. Depending on how that's structured, again, a life insurance annuity contract could be beneficial. In fact, when you're doing the heavy estate planning, you typically need an insurance inside of a trust to help you pay the taxes. It's a little complicated. So the fact is, from the get, most people aren't in a position to get this kind of product. Now, if you do, they're expensive. It's a yearly contribution, regularly, all the time. Whole life insurance contracts are not cheap. They provide a lot of function. They typically predate the IRS code. So it's a kind of delicate field to know whether or not you're the kind of person who needs it. And the only way to do that is by going to, I guess one way you would talk to an insurance agent and see if that insurance agent kind of actually understands what they're selling you. speak with a certified financial planner, they're going to have a better grasp of these kinds of products as opposed to just a salesman. And I'm not trying to take shots at anyone, but facts are facts. There's products, and then there's people who understand what those products are actually used for on the back end. And again, I want to reiterate, for the majority of most people, it's not for you. Infinite banking, I guess, like, let's break it down in the sense of the ideal person is, let's say, a farmer who every year is purchasing new equipment. And so they're making enough of a cash flow where they know that they can purchase this new equipment. And so in that sense, this insurance contract works as another lever to pull on so that they can go out and create and expand the business far greater than as it initially was. That's financing by using insurance. That's what infinite banking really is. Anything other than that, and somebody's selling you something that you probably don't want anything of. I was kind of Googling and going through YouTube, and you can see that there's tons of people who were sold this who are really pissed off because they lost money, in the sense that they can't recuperate that money instantly. It's a contract. It's a contract where typically you're expected to die. So if you break that contract, that money, in some cases, depending on who your company, who you're working with, could say that money's gone. That's the unfortunate truth. But if you don't read the contract, you don't know what you're getting. And your agent should be able to tell you this. And in most cases, they don't, because there's a fat commission usually on the other end. And nobody's going to tell you this. That's why it's not for everybody. You see, at a certain point when you're playing this business game, you need to use these tools to keep more money in your family. And it's accepted, it's done, it's regular. They're called irrevocable life insurance trusts. That's when you need whole life insurance in most cases. Another instance could be you're using an older type of retirement plan that's called a defined benefit plan, where it uses annuities, and usually there's some insurance in there, either term or whole. That's just kind of how these products were made, to give the real benefit to these employees. So they're working at a company like GM. They're an assembly line worker. They're going to have a very nice retirement based upon this annuity, so long as GM is able to make these payments into these pension plans. That's a whole nother conversation. But structurally, that's what we're talking about. How a business and its owners and its employees can use these contracts to receive benefits, either at death, either during retirement, or while they're alive, have access to money, in some cases with whole life insurance. I think this explains it a little bit better. This is not an illustration where I have diagrams of this, that, and the other. It's just, understand this is conceptual. It's a strategy. It's not a product. And I think that's the big difference that most people don't quite understand. And it's a gap in understanding that because you've never seen it used with taxes, essentially. Most people. Taxes and estate planning. Whole life insurance is typically used in that instance. Otherwise, like I said, term is probably best for you. Some financial planners will say, invest in term, and the difference that it would normally cost for whole life insurance, you should be able to put that into the stock market and you'd do better, which is typically true. But again, at this level, it's different. And that's kind of what I'm hitting at. So let's see, somebody's at the door.